In this strategy, all you need to do is for you to focus on the Middle Bollinger Band. And I tell you, by doing this consistently will make you profitable 80 to 90%. This is the upper Bollinger Band and this is the lower Bollinger Band. Here is the Middle Bollinger Band. Now this is applicable across all pairs, both forex, both indices, both gold. You can use this strategy to trade every pair and it is very much effective. I will need you to watch this video carefully and then go back test it. The advantage of this is that the Middle Bollinger Band is a leading indicator, so this is not a lagging indicator. So you won't be getting a late entry signal. It plays out instantly with the price action. And as you can see that price is around the Middle Bollinger Band. Price is there now and the Middle Bollinger Band is there instantly. This is not common when it comes to normal moving average. So here's the setting. It is a special setting. Ignore every other indicator for now. Let's focus on the Bollinger Band. The period is 130, deviation is 2.0, the shift is close and you apply it. The shift is 0, you apply it to close. So this is just the special setting of the Bollinger Band that I will need you to focus on. How do we trade this strategy? This Middle Bollinger Band is same thing as the 200 moving average, just that the 200 simple or exponential moving average is a lagging indicator, but the Bollinger Band is a leading indicator. So let's focus on this. Once price is above it, just as in this scenario, price crosses above it, it becomes an opportunity for you to buy. It indicates that you are in an uptrend. But our focus is we want a bounce of price on the Middle Bollinger Band. So just as we are seeing it now, price has gone up and then price has returned to the Middle Bollinger Band. So we want a bounce of price on it. Let it give us a bullish candle formation. So once we get a bullish candlestick formation, either a hammer or an engulfing candle, we are going to buy straight up to the upside. That's exactly what we'll be doing. It means we'll buy to the upside once we get a bounce from this Middle Bollinger Band. So look at this. Here we have a pin bar candle formation. Look at this pin bar here. So if you would have bought at the close of that pin bar, you have this little push up to the upside in terms of 1 hour. So however, let price be consistent. Like in this scenario, price went up. Remember, what we are trading is a bounce of it. So the reason this particular one did not play out is this. Price just went up. So we want to see price return to the Middle Bollinger Band, retest it with a bullish engulfing before we can buy. Not just because price will come to it, you will just buy. No. You need a bullish candlestick confirmation, a rejection, a bounce of the Middle Bollinger Band, and then we can go in for our entry. So in this scenario, we don't have a bounce yet. So if price did not give us a rejection and it continued to the downside, we will continue. It means it's a sell price direction. So you can see that, look at this scenario, a typical illustration here. Look at this. Price came back, gave us a pin bar here. So you would have bought from here all the way to this point. So you see that price will respect it regardless, although afterward it has become a downtrend. So let's look to more assets. Now let's look at volatility, and this is volatility 75. Look at how it plays out beautifully well. So here you can see how the price plays out. Remember, you must treat this Middle Bollinger Band as a zone. Okay, so look at in this scenario, price went above it, okay, and then it now pull back. Now from that pullback, it now gave us what? A pin bar candlestick formation. So look at this. We have the beautiful pin bar, and immediately after the pin bar, you see the price playing out. Let me quickly put off the zigzag indicator so that we can see it more clearly. So you can see that, you see that pin bar, price came, retest that zone, and it's going. Here again, if we get a bullish engulfing candle here, we are going to go in, or a bullish pin bar, will make a buy entry at this zone. Okay, so let's move to another pairs and see how exactly this works. This is good, and you can see how this is applicable to it. You can see how price came back, pulled down to the Middle Bollinger Band. Do you see that? It must not touch the exact line, just around the zone of it. You can see after it pulled back, then you have this what? This particular engulfing candle. And then you now buy, your stop loss is here. This is your entry. So you see how price plays out. This is very much easier and simpler for you to focus on. Now you don't need to bother yourself about much. Just focus on this, be consistent about it, and you see how greatly, look at this. You can just backtest this on and on, and you will be glad you did. You will be glad you did. You will really appreciate this. You can see this is crash 900, and here we are having another one. Although this is too far from this, so we are not taking this. But however, look at this a little. You can see this, and then you see that push up to the upside. This is applicable across all assets. Once you get the confirmation, it is also provable on 15 minutes. Let me take you back briefly to 15-minute time frame on any of these assets. Once you get this on the 15-minute time frame, you can focus on it and see how it works. I'll backtest it on 15 minutes and I see how it works out very well. Look at this. You can see this pin bar. So on the 15 minutes, it's going to be a quick scalping. So you can see that we have this candle formation. This is a hammer formation. So you'd have bought here and then you see that pullback. So but on this 15 minutes, it's going to be a quick scalping. Look at this one. Just take your time. You don't need to rush. Backtest this on all of your assets by just doing this particular setting, and you will be surprised. Now price is approaching the zone. If you get any bearish candle confirmation from this zone, just sell. You'll be surprised how it works. To additional confirmation, you can use your trend line. Just pick up your trend line and then you connect it. In your lower time frame, you can connect your trend line and then you wait for price to do what? For price to break out of your trend line for you to make your entry. You can do that as an additional confirmation tool. And you can see that here too in this scenario. Look at this. You see that bullish candle and then you buy. One thing with this crash or boom is that on a lower time frame, when you get a long engulfing candle like this, it is not advisable you buy here and then you put your stop loss here. It is not advisable at all. So just be patient to wait for another pullback, just like in this scenario. Yeah, it is enough for you to make your buy, because on a lower time frame of this boom and crash, anytime you get a very long spike this way, it will create an imbalance. Do you see that? It will create a fair value gap. The price will need to come back and refill later before it will now spike and continue to the upside. Please backtest this. I want to hear your feedback. Just focus on nothing but the Middle Bollinger Band. I tell you, you'll be glad you did and you will thank me later. Thank you for watching. If you are here to subscribe, go ahead and smash the subscribe button. Turn on your notification bell so you'll be the first to get notified, so you don't get to miss our next video, and see you in the subsequent video.